right, let's take a look at your markets picture, kicking things off with the JSE. Now, it's been another day of mixed trade here at home, with the Resi 10 continuing to do the heavy lifting, with platinum and palladium prices trending in the green. With that, we are seeing the resources 10 complex up 1.2%, the financial 15 gaining 0.14%. However, trading in the red is the industrial 25, losing close to 0.5%. Taking all of that into the account, the all share in the green gaining just over 0.25%. Now let's take a look at what's playing out over in the US. Markets retreating following negative economic data. Focus on the consumer's health as retail sales growth slowed and consumer confidence slipped. Private payrolls, that is, also out, pointing to a weaker labor market. And with that, markets not liking those prints. The Nasdaq leading the losses, down close to 0.75%, while the S&P 500 shed just over 0.2%. Trading in the opposite direction, though, is the Dow Jones, up 0.33%. Now let's move over to what's playing out in Europe. Traders tracking developments between Russia and Ukraine as peace talks are under the spotlight. Markets also awaiting the UK's autumn budget. Ahead of that, it is green across the board, with the French CAC 40 leading the gains on that front, up 0.8%, followed by the DAX gaining 0.63%. The FTSE also in the green, up just over 0.5%. Now let's move over to what's playing out on the currency front. We are seeing the local unit steady amid a broadly stable dollar and improving domestic economic fundamentals. It is stronger against the rand at 17.23, weaker against the pound at 22.72, and close to 20 against the euro. Let's take a look at your other currency pairs. The euro to the dollar at 1.15, the pound to the dollar at 1.31, and trading stronger is the dollar to the yen pair, just above 156. We're now joined by Makwe Masilela from Makwe Fund Managers. Makwe, thanks so much for your time today. So I just ran through those prints out of the US. Private payrolls coming through and pointing to a weaker labor market, consumer confidence faltering, and retail sales not doing enough to impress investors. How are you reading it all, considering that some of the data is also delayed?
Definitely, and all because of the government shutdown. But we first need to remember that surely valuations are overstretched, but history tells us that, elevated valuations does not necessarily mean that they will bring an end to any rally. But yes, all instead it means is that we should, at least maybe in the long term, expect modest returns. But the fact that we had a Fed official on Friday, and apparently the New York Fed official is much closer, or is close early to the Fed chair, and also we had another Fed official yesterday starting to reignite our expectations that we'll definitely get an interest rate cut come December, when the US is meeting for the last time. That itself has boosted market sentiments. And yes, people are reading into that data more as, it's more of a delayed data more than anything. Only I think starting from December, we'll start to see the actual data, and maybe probably we'll start to factor in or get a better clue on how the US economy is doing. But given what we have got so far, yes, it's not a pretty picture. And if that's the case, that is just so mixed, then definitely continues to warrant that the Fed has to come into play and try to help the economy by at least giving us an interest rate cut.
So lots to digest for the Fed and for markets as a whole. Makwe, let's hit pause on the conversation. Makwe there from Makwe Fund Managers. He brings us a full assessment of the day that was in trade at 6 p.m.